Hi, welcome to my YouTube class 11 Accountancy subject. Today we are going to discuss about the terms of the bills. In the last part we had discussed about the definition, meaning, features and advantages of the bills of exchange as well as promissory notes. So before going to go for the accounting treatment of the bills of exchange, it is necessary, it is indeed part of the topic to know the basic terms of the bills of exchange, whether bills of exchange or the promissory note. So the terms of the bills need to be understood clearly for the accounting records, for the accounting treatment of the bills of exchange as well as promissory notes. So let's begin with the terms of the bills. Today, bills of exchange, there are certain basic terms are there. The first basic terms is there is drawer. Who is a drawer? Drawer is a person who draws the bills or the maker of the bills. He is none other than the person of the creditor. So this is drawer. There is the parties of the bills. The first party of the bills, that is the drawer, who is a maker of the bill, who prepared the bill, or the creditor of the bill, who sold goods on credit to the debtors. Then second is your drawee. So drawee is a person who makes the payment of the bill, the person upon whom the bill is drawn and accepted. The drawee accepts the bills and return to the drawer. He honors the bill. He is none other than the person of the debtor who purchased goods on credit. So that is the drawer is the creditor, drawee is the debtor. Drawer is the beneficiary of the bills of exchange, and drawee is the paid who paid the bill amount. Then paid. Paid is none other than the person who receives the payment of the bills. He may be the drawer or maybe third parties. That some other persons like bank or to some other third parties when the bill is endorsed or transferred. So that is the paid. That is the none other than the person who receives the payment of the bills. Then term of the bill. Term of the bills means that is the period of the bill for which the bill is drawn. The bill may be drawn for 2 months, 3 months time. That is the date of drawn and the due date. So that is the term of the bill. From the date of drawn till the date of due date is called, that is the term of the bill. That is the period of the bills. The number of days, number of months for which the bill is drawn. Then due date. Due date is the date on which the bill is actually falls on payment. That means, for example, a bill is drawn on 1st January 2020 for 3 months. So the term of the bill is from 1st January to 31st March, 3 months is the term of the bill. But the due date is 31st March because 3 months complete on 31st March. That is the due date. Then days of grace. Days of grace is the extra period which is granted for the payment of the bill. That is generally 3 days extra period is granted to the drawee for the making of the payment. That means, as I told you, the bill is drawn on 1st January and for 3 months of time, the bill's due date of the bill is the 1st April. So days of grace, 3 days extra is added. So 1st April plus 3 days, that is on 4th April, the bill is mature. So that is the date of maturity, is the date on which the bill is due for payment. That is the, after adding 3 days extra to the date of bill, the bill falls for the maturity for the payment. You can see Just first examples, a bill drawn for 3 months on 1st January. So here days of grace is 3 days. Then date of maturity is 1st April plus 3 days equal to 4th April. That is the date of maturities. 3 months time from 1st January. So January, February, March, 3 months plus 3 days extra is added, that is the grace period. So then the date of maturity is calculated. So that is the date on which the bills is due for the payment. If the date of maturity falls on public holidays or the Sundays, the succeeding days will be taken into account. That is the preceding days. Preceding days will be taken into account for the payment of the bill. If the 3 days you had added, but out of the 3 days, 2 days it falls on public holidays or the Sundays. That means the 2nd April is to be 2 days before. That is the preceding the date of grace, 2 days grace, that is the public holiday will be excluded. Then the bills of maturity date will be calculated. That is the date of maturity. Then bill at sight or on demand. That means the bill which does not need any date for the payment, that is called bill at sight or on demand. The bill drawn today and paid today. For example, we issued the check. Check is the bill at sight or the payable on demand. Check. Today we had issued the check. Today the person got the payment. So that is the bill on at sight or on demand. Then discounting of bills. Discounting of bills means the bill is actually not discounted. So before maturity, if the drawer wants to get the payment, receive the payment of the bill, then what he will do? That means the bill is drawn for the 3 months. So on 15th January, suppose the bill is drawn on 1st January and it is due time is for 3 months. Before 3 months, that means after 15 days, on 15th January, the drawer wants to get the payment, wants to receive the payment of the bill. What he will do? Now he will deposit the bill with the bank for discounting the bills. He will request the bank to discount the bill for the payment. That means the bank will calculate the amount of charges which they will deduct from the bill and the balance amount will be paid to the drawer. That amount which they will deduct from the bill is called discounting charges. Actually, it is not discounting charges, they are deducting the interest, because they are giving you credit for 2.5 months. Because if the bill is done for 3 months, so on 15th January you are discounting the bill. That means 2.5 months before you are getting the payment, and the bank gives you credit for 2.5 months. After 2.5 months, the bank will receive the payment from the bills, on the bills from the drawer. So in this situation, the bank will charge the market rate of interest and deduct from the bill the balance amount they paid. The amount which they deduct is called discounting of the bills, discounting charges, and this is called discounting of bill. Then endorsement of bill. Endorsement of bill means the bill which is transferred from drawer to the third parties. That is called endorsement of bill. That means simply the bill is transferred from one person to the another person. The holder of the bill can transfer to the third parties or to his creditor. That means suppose a bill is drawn by A upon B for 3 months, and after the bill is received by A transfers it to C. So that is the endorsement of the bills. The person to whom the bill is endorsed is called endorsee. That means the name of the person on whom the bill is endorsed. A transfer the bill to C. So C is the endorsee and A is the endorser. The person who transferred the bill is called endorser. So this is endorsement of bill. Simply transfer of the bill by the drawer to the third parties. Then bill sent for collection. Sometimes the drawer send the bill to the bank for collection. The bill will deposited in his bank till the date of maturity. On date of maturity, the bill is honored and it is to be received by the bank. So just like we are receiving a check from somebody and we are depositing in our account. So the bank will collect the check amount. So that is just like of that when drawer sent the bill to the bank for collection credited to his account, that is called bill sent for collection. That is deposited by depositing in the bank. So that is bill sent for collection. Then 13th one is disjourner of the bills. Disjourner of the bills means when the drawer helps to make the payment of the bill amount on the date of maturity. So that means on date of maturity, the bill suppose it drawn on 1st January for 3 months of time. The date of maturity is 4th April. We have calculated here that on 4th April the drawer, there is the date of maturity. On 4th April the drawer fails to make the payment. That means the drawer says I am unable to make the payment of the bills on the date of maturity, means on 4th April. So then the bill is dishonored. It is not honored. When drawer makes the payment, it is called honor of the bill. When drawer fails to make the payment, unable to make the payment of the bill on the date of maturity, then it is called dishonor of the bill. Then noting charges. Noting charges is the fees collected for the dishonor of the bill from the drawer, because drawer will send the bill for the dishonor. When the bill is dishonor, the noting charges a fees charged for the dishonor of the bill, that is called noting charges. That is the legal fees. Then noting of the bill. Noting of the bills means the notary public makes a noting of the dishonor of the bill is called noting of the bill. The notary public, who is the legal officers who sees the detailed terms and conditions of the bill, then after he put his signature, cancelled and write the dishonor of the bill. That means he notes the bill is dishonor, then is called noting of the bill. Then notary public. Notary public is the lawyer of the central government or the state government who is called notary public officer. Notary public. He is the lawyer or the legal persons who notifies the bill, who certifies that bill is dishonor. That is called notary public. He may be a central government officer or the state government officers for the making of the noting of the bills for dishonor purpose. Then retirement of bill. Retirement of bill means, just I told you, when the drawer fails to make the payment on the date of maturity, that is called dishonor of the bill. If he make the payment on the date of maturity, that is called honor of the bill. But sometimes the drawer makes the payment of the bill before the date of maturities. Then we call it is a retirement of bill under rebate. So when discounting of bill is there, drawer makes the bill, deposit to the bank in his bank, then request to the bank to make it discounting of the bill. That is called discounting charges deducted by the bank. Likewise, when the drawer, the debtor, requests the drawer that I want to make the payment before the date of maturities. Just that example, the bill is drawn on 1st January for 3 months of time. So after 1 month is over, before 2 months, the drawee wants to make the payment of the bill. That means for the 2 months, he will get certain rebate. That is called, because he requests to make the payment to retire the bill before the date of maturity, then we call it is a retirement of bill. Then renewal of the bill. Renewal of the bills means when the drawer get the payment on the date of maturity, the bill is honored. When drawer does not get the payment on the date of maturity, he makes it a dishonor of the bill. Before making dishonor of the bill, if drawee requests the drawer that please give me some extra time for the payment of the bill amount, then we call that old bill is cancelled, a fresh bill is drawn for extension of time. For that extension of time, you may be charged, pay the certain interest. So this is called a renewal of the bill. That means the old bill is cancelled, giving extra time to draw a new bill. We call it is a renewal of the bill. So renewal of the bill is to be drawn when drawee sees he is unable to make the payment of the bill on the date of maturity and does not want to make dishonor of the bill. So in those situations, he may request the drawer to cancel the old bill and accept a new bill by extending some time. So just that example, that bill is drawn by A upon B for 3 months of time. So on 4th April, the bill is matured. Before 4th April, on 1st April, the B requests the A to extend 2 months extra time and charge some interest to renewal of the bill, extension of time, that is called renewal of the bill. Then accommodation bill. Accommodation bills means that bill which is used for the mutual help. That means there is no credit transactions, no trading transaction, but some amount I want to give on debt to my friends. So in these situations, accommodation bill is used. Then negotiation. That is another term used, negotiation. Negotiation is the term used when the drawee makes the negotiation with the drawer to make the payment of the bill amount. So that is called negotiation. So there is the drawer and drawee makes the negotiation, exchange their views and the words among each other for the payment of the bills or the bill amount, that is called negotiation. So this is about the terms used for the bills of exchange or the promissory notes. So these terms, hope you had understood it clearly. So these terms are important for the accounting entries of the bills of exchange. For accounting purpose, we need those terms to be clearly understood. If there is any doubt in those terms, then certainly your accounting treatment, accounting entries will be wrong. So again, in the gist they are telling again it drawer, person of creditor, drawee, that is the debtor who makes the payment, pay, the person who receives the payment, term of the bill, that is the bill time, bill months, then due date, that is the date on which the bills falls due, there is a days of grace, 3 days extra date is added, date of maturity, that is after adding 3 days grace period with the due date, then the date of maturity is calculated. Then bill at side or on demand, the bill which does not need any time, the bill is immediately paid. Then discounting of the bill which is to be discounted in the bank by the drawer to receive the payment of the bill before date of maturity. Then endorsement of bill, transfer of bills, bill sent for collection, drawer sent the bill to the bank, means deposit the bill in his bank account for the collection. The bill is kept till the maturity with the bank, then the money is received. Then designer of the bill, when bill is not honored by the drawee, that means fails to make the payment of the bill, that is called designer of the bill. Then noting charges for designer of the bill, a fees charged by the notary public, who is the legal persons to certify the designer of the bill. He charges some fees, that is called noting charges. Then noting of the bill, recording the designer of the bill. Notary public is a legal officers like the central government or state government to record the transactions. Then retirement of the bill, when drawee makes the payment before date of maturities, that is called the retirement of bill. Renewal of the bill, so before date of maturity, the drawee may request the drawer to cancel the old bill and accept a new bill with some extending some period, some time. That is the renewal of the bill. Accommodation bill, that is the bill which is used for mutual help between the two parties for financial transactions, that is called accommodation bills. Then negotiation means exchanging the views words between the drawer and the drawee for the making of the payment and receiving the amount of the bill, that is called negotiation. So these are the various terms used for the bills of exchange. Then comes to the accounting entries of the bills of exchange or the accounting treatment of the bills of exchange. So as you see in the terms, there is discounting of the bills, endorsement of bill sent for collection, bill kept till the maturity, then designer of the bill, renewal of the bill, retirement of the bill. These are the various conditions on which the accounting entries are to be recorded. That is, the accounting entries for the bills of exchange or the provision notes is same. There is no different. So there are two parties. Mostly there is the drawer and the drawee. Drawer is the creditor, drawee is the debtor. Drawer who sells goods on credit, drawee who purchase goods on credit. So drawee is the debtor and drawer is the creditor. So in those cases, trade bills is to be used, and this trade bill and the pay in between the drawer and the drawee, pay is the same. The drawer who makes the bills, and bill is accepted by drawee, then the bill is sent to the drawer. The drawer keep the bills either till the date of maturity for receiving the payment, or he can discounting the bills, or he can endorse the bills, or he can send the bills to the bank for collection, or the bill may be designer or retirement of bills or renewal of the bills. These are the various conditions on which accounting entries to be done. So there are two parties, that is drawer and the drawee. Drawer makes the bill just after sale of goods. He makes the bill in the name of the drawer, because he sold goods on credit, so he makes a bill immediate, because for the proof of records, so for the security of payment. So after the bill is drawn by the drawer, send it to the drawee for the acceptance, because without acceptance, bills of exchange cannot be a valid bills. It is invalid. So drawee will accept it, sign it, and return to the drawer. Then the drawer receives the bills. Then after, he will keep the bill till the date of maturity, or bill sent to bank for collection, or he can endorse the bill. That is up to the drawer. So this is the general things on which accounting entries is to be done in the books of the drawer and the drawee. So this is the accounting. Let's see the accounting entries. See that how accounting treatment or the accounting records is to be done for the books, in the books of drawer and the drawee, for the bills of exchange or the promissory note. Both the promissory notes and the bills of exchange, the journal entries will be remain same. There is no difference. The two parties are there. One is your drawer and the other one is your drawee. Drawer is the creditor, as you know. Drawee is the debtor who purchase goods on credit. So there is a trading transactions between the drawer and the drawee. One will make the bill. So when drawer draws the bill upon the bill or the drawee, so drawee accept the bills and return it to A. When drawer makes the bill and the drawee receives the bill, so that is called bills receivable for the drawer, and for the drawee accept the bill, return to drawer, so that is called bills payable for the drawee. So bills receivable used for the drawer, bills payable used for the drawee. So that is the terms used. One will be bills received and another will be bills paid. So that is bills receivable and bills payable account will be used. So that is the representative personal account. So that is the see this examples that how that accounting entries to be recorded. First conditions I had taken when bill is retained till the maturities. There is the books of the drawer and this is books of drawee. So there is the books of drawer or the creditor. This is the books of drawee or the debtor. You can say this is the debtor. So let's see the examples I had shown here. That is the A sold goods to B for rupees 10,000. The amount is 10,000 on 1st January 2020. Then on the same date, A draws a bill upon B for 3 months. That is the time is 3 months. On 3 months of time, B accept the bill and return to A on the same date or different date. No problem. On the maturity date, the bill is made by B. Give journal entry in the books of A and B. So that is the examples. See, that is the bill when bill is still retained till the maturity by the drawer, and then after he gets the payment. So first entry in the books of the drawer, there is the date of sale, debtor's account or drawee's account debited to sales account. So in this example, the A sold goods to B, that is for rupees 10,000 on 1st January. So here drawer is the A. So on 1st January 2020, debtor's account, this is B account. B's account debited to sales account, this is 10,000 rupees. So I think it is clear. First entries. So likewise in the books of drawee, that is the debtor, that is B. So that is the date of purchase, 1st January 2020. Purchases account debited to creditors account. Creditor is A. So that is the A's account, 10,000 rupees. So this is simultaneously do the entries, then it will be clear. Correct. This is sales entry in the books of A. This is the purchase entry in the books of B. Then on the same date, A draws a bill upon B for 3 months. That means on the same date, that is the 1st January 2020, A draws a bill upon B and B accepts the bill returned to A. So let's take the same date. Bills receivable account, bill is received by A from B. So bills receivable account debited to drawee's account. Drawee's is here B. That is B's account. This is 10,000 rupees. So likewise in the books of drawee's account debited. This is A's account debited to bills payable account. This is 10,000. This is the first 2 entries completed in the books of A and books of B, means books of drawer and the books of drawee. Then next is your date of maturity. Calculate the date of maturity. 3 months time is there. So this is date, month, this is year. 3 months time, add 3 months, year. So first month, second month, third month, 3 months completed, that means March. So 4th April, that means 3 plus 1, that is 4th April. 1st April 2020 is the due date plus 3 days extra, that is 4th April 2020. So that is the date of maturities. That means 1/4/2020 plus 3 days less. So that is 4th April 2020. That is the calculations. So maturity date, cash or bank account, bill is matured. So that is either cash account or bank account. If 10,000, up to 10,000, make it cash account. Above 10,000, make it bank account. So cash account or bank account debited to bills receivable account. This is 10,000 rupees. The bill is matured 10,000 and the amount received. So that is bill is 10,000. This is goods sold 10,000. So in the books of B, bills payable account debited to cash or bank account. This is 10,000. It is on maturity date 4th April 2020. Then bill is duly honored and paid by B to A. So this is 10,000 rupees. So these are the journal entries when bill is kept till the date of maturities. So simple. First entry, purchase and sales entry in the books of drawer. Then second entry, bills is received from the drawee. Then third entry, that bill is kept till maturity and bill is matured, payment is received. So cash or bank account debited to bills receivable account. Here bills is debited, bills receivable is credited because bill is cancelled and cash is received. So likewise in the books of drawing, first entry, purchases entry, purchase of goods on credit. You know it better, purchase account debited to creditors account. So here A, the drawer account. Then A's account debited, that is the A's account debited to bills payable account because bills is paid by, accepted and paid by the drawee to drawer. Then bills payable account debited to cash account, that is the bill is matured and it is honored by drawee. So when he makes the payment, bills payable is cancelled and cash will be paid to A. So this is the normal situation. The first situation in which the bill is kept till the date of maturity and payment is received. I had shown these examples and show the problems also. So you can add here, some question may be added that if part of the sales is done on cash basis. Suppose this is 10,000 and part of 10,000, 1,000 paid immediately cash and for the balance he accepted bills. So here bills receivable account debited, cash account debited to B's account, that is cash received 1,000, bills will be 9,000 reduced. So that is the additions to the journal entries. You can do the more questions and it will be more practice. Hope you had understood today. So thank you.